The private lending industry began experiencing a major shakeup in October 2022, and the lending environment has seen a lot more turmoil just in the past several weeks. In this video, I'll explain what's happening in our industry, why many lenders have halted lending activity, and which types of lenders are thriving in the current environment. I'm Butani, founder of PrivateLenderLink.com, where investors and brokers can easily find direct private lending companies. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. This video was produced in November 2022. Much of the information I'll share was gathered from talking to many of our lender clients and attending 3 private lending conferences in the past 4 weeks. The sentiment regarding the current lending environment is gloomy for the majority of lenders throughout the country. After most lenders had a record year in 2021, with the lowest interest rates in history, the recent rate hikes by the Federal Reserve are causing drastic cuts to lending activity and inflicting a lot of pain that many lenders were not prepared for. Most of the pain is a result of lenders not being able to sell their loans. The majority of residential private mortgages are sold to the institutional secondary market. Most private lenders originate a loan using their balance sheet or a warehouse line and then sell to an aggregator, which is essentially a company that buys loans from multiple lenders and then pools many loans to create a security, which is then offered to large institutional investors. Over the past few months, there's been a huge reduction in liquidity available for lenders to recycle their capital. In the past few weeks, we've seen one prominent loan buyer shut down and go out of business. A few loan buyers have completely exited the private lending space, and the larger ones are only buying loans from established lenders that have multiple capital sources and a large balance sheet. The reason is they are expecting a sizable number of loan defaults in the next 12 months, and the lenders need to have the capital to buy back those loans that do go into default. Therefore, the small to mid-sized lenders are getting cut off and left with nowhere to sell their loans. This dilemma is causing many private lending shops to downsize, pause lending activity, or go out of business. As one of the large loan buyers said on stage at a conference I recently attended, the short-term loans originated today and the past few months are the worst loans with the highest risk of default. There will be a lot of real estate investors that complete a rehab or ground-up construction project in the next 6 months who will struggle to exit their loans. A sale will be more challenging with a smaller pool of buyers. The investors that plan to hold their property as a rental may not be able to qualify for a long-term refinance due to the high interest rates, which currently range from 7 to 9%. Unfortunately, many investors could end up defaulting on their loans and will be forced to sell their properties at a loss. More than the high interest rates, the decline of property values is leading lenders into even more turmoil than they've faced in the past few months. Obviously, lenders prepare for a decline in values, and that's why most private loans max out at 70% LTV. However, some lenders are getting into trouble because of their warehouse lines. Many lenders use a warehouse facility to fund their loans before selling to the secondary market. Others use a warehouse facility or a bank credit line to permanently hold their loans throughout the loan term. These warehouse facilities typically come with requirements that can put major strain on lenders in a down market. One common requirement for warehouse lines is related to the loan-to-value. For example, they may have a requirement that any loan on the warehouse line cannot exceed 70% LTV. When the value of the property securing the loans drops, that increases the loan-to-value. When a loan on the warehouse line exceeds the allowed LTV, the lender has to pay the difference in cash, typically within a few days. If they can't make the payment, the lender's in default, and the warehouse provider takes control of the loans. Aside from the maximum LTV, many warehouse lines don't allow delinquent loans or aged loans. So if a real estate investor goes into default on a loan that sits on a warehouse line, or the loan can't be paid off within the maximum allowed term, the lender may have to take the loan off the line within a few days. If they don't have the capital to do that, the warehouse line goes into default, and the lender could get wiped out. Most warehouse lines have an expiration, typically 1 year or longer, and due to the current market conditions, some warehouse providers may not be willing to renew, which means lenders may lose their most vital capital source. The warehouse line dilemma is causing some private lending shops to halt lending activity or go out of business. Property values only started to drop recently, and there's a long way to go. Until we see values bottom out, the private lending environment will be extremely challenging. Many lenders anticipate the institutional capital market to return to normalcy a year from now, in the fourth quarter of 2023. Most expect the Fed to stop increasing interest rates in the next 6 months. However, there are still some private lending shops that rely on institutional capital still actively lending. And some private lenders are completely unaffected by the capital markets, especially ones that manage a debt fund without any leverage, as well as lenders that get their capital from high net worth individual investors. Most of them are regional and limited to lending in one or a few states. Even though some lenders are well capitalized, they are all being more conservative and selective. You can find many active direct lenders on our website, privatelenderlink.com. All the private lending companies listed on our site have a very detailed profile that shows their lending guidelines. You can contact each lender directly, or if you'd like some recommendations, click the Create a Loan Request button. Provide some information about your deal for us to review, and we'll invite a few select lenders to look at it. If you found the content in this video to be useful, please click the like button and be sure to check out our other videos about private mortgage lending. Thank you for watching, and see you in the next video.